Namaste, hello and welcome to my channel Orko's Classroom. I will teach you accounts, and today our topic of discussion would be Introduction to Accounting. This is the first chapter which we will do under accounts, and this is for all the boards, whether it is Cbse, ISC or any other regional language boards. So we will start with the introduction of accounting. First, we should learn what is accounting. Let's begin. First, we should learn what is accounting or the basic definition of accounting. So, first step does it involve? First is recording. What does it record? It records the financial transactions and events. So, this is the first step of accounting, which is recording, or recording of what? Of financial transactions and events, that is, which are monetary in nature. Number second is the second point is, after recording, is classification. Classification involves what? Items one by one, which will come under head. There are various heads in accounts, and under those various items come along. So what does that mean? That is classifying. That is posting journal entries while recording here and posting it into ledger accounts. This is the second step. For accounting is recording, classifying, and then the third step is summarizing. Summarizing of what? Financial transactions. And those summarizing, in which place, how we will summarize? In trading account. We will learn it later. First, at least you know the name. Profit and loss account and balance sheet. So, accounting can be said as recording, classifying, summarizing, and more towards that, there are number fourth point is interpreting. What does it involve? Interpreting involves the results thereof. That means in trading account or profit and loss account, whatever the result it will show, or in the balance sheet, it will involve, after that the process is interpreting. The results thereof of those accounts will be interpreted. So that is interpreting. What does that involve? In short, assessment of profitability and so the fourth step is interpreting the results thereof. What does that involve? Interpreting of what? What we will come to know after interpreting, that whether the organization or the firm is in profitable state or not, or what is the financial position of the business at that point of time. Number fifth and the last step is please note down this point, interpreting. Last step is communicating. Communicating what? Communicating the financial results of the to the users. That means after interpreting, what does the organization do? It communicates the result, the financial results, to the users. Please see. Now the question is, who are the users? The users are the lenders, that means those who lend money to the company or the firm. The creditors, who sells their products at credit. Then shareholders of the company. Governments, banks and employees. So the final stage is communicating the financial results to the users. Who are the users? The lenders, those who lend money. Creditors, those who sell goods in credit. That means not in full amount, maybe partly paid, or the amount to be paid later by the company to the creditors. The shareholders, those who held shares in the company. The governments, that is nothing to explain. Banks and the employees. They are the financial users of the accounting informations. What is their purpose? To communicate so that these users can make decision or take decision. For decision making purpose, these are communicated. Fine. So we can say, please note down this point by pausing your video or by seeing. Okay, done. Now I hope you now remember all the 5 points which I discussed. In short, this is a process. Thus accounting, if you can remember, the first point was recording. The first starting point is recording, then it goes to classifying, then summarizing, then interpreting, and final is communicating. And then again it goes here. So this whole process, first is recording, next is classifying, then summarizing, then interpreting, and finally communicating. This whole process we can say it as accounting cycle. See, this whole process comes in a full circle, in a full cycle. So recording, classifying, summarizing, interpreting, and communicating. So this is what is known as accounting. Recording what? Financial transactions, classifying them or posting them into ledger accounts, then summarizing them, that means preparing trading and profit and loss account, balance sheet, and then interpreting, that what does it show in regards with the concern, and finally communicating it to the users, those users for decision making purpose, whether they are willing to or able to invest in the company or not, or their knowledge about the company, knowing how or in which position they are in, as they are the interested parties, the users. Okay. So we move to the next topic, that is evaluation of accounting, or how accounting has been evolved over number of years or time. So our next topic of discussion is evolution of accounting. So when did this accounting evolve, or from what time does this evolution took place? The first known fact is that is 7,000 years back, the first trace of accounting was seen in Mesopotamia. It is a place in Middle East. So in Mesopotamia, we know the Mesopotamia civilization, if you can remember your history classes. So first accounting was found 7,000 years back in Mesopotamia. Now my second point is, in India, it was found by Chanakya. Who was Chanakya? Chanakya was the chief minister in the court of Emperor Chandragupta. And he wrote a book, Chanakya, that is Chanakya wrote a book regarding the financial management That book was named as, it is very famous, you may have heard that, Artha Shastra. So, These two things you must remember. That first, it was found in Mesopotamia 7,000 years back, and in India it was founded by Chanakya, who was the chief minister in the court emperor of Chandragupta. He wrote a book regarding the financial management which had accounting in it, and that book is known as Arthashastra. It is very important for your MCQ exams, because nowadays MCQ exams are in the process to be had in November. So for that you must know at least these two names. Okay. Now this is history of accounting. Now modern day accounting. From where modern day accounting started? We will now study that part. There are three parts. How modern day accounting started. These are the history. It is done away with. First phase of accounting. In 14th century it happened. Who was the pioneer? The pioneer was a person named Fra Luca Pacioli. Very important for your MCQ exams. Fra Luca Pacioli, the first phase of accounting in the 14th century. He was the architect of double entry bookkeeping. And he wrote the book, again very important for your exams. Name is, maybe in MCQ they may give the name with other options. Summa de Arithmetica Geometria Proportionate Proportionality. So remember this name of the book, Summa de Arithmetica Geometrica Proportionality. Who wrote this book? Fra Luca Pacioli wrote this book in 14th century. He was the modern pioneer of accounting, and he only was the architect behind the double entry bookkeeping system. What is double entry? We will come to know about it a little later in this chapter only. Okay. Next is, this is the first phase of accounting. Note down, this is the first phase. Fine. Now comes the second phase. Extremely sorry. What happened in the second phase? In the second phase of accounting, owners began conducting business through managers. So, the second phase of accounting is where the owners began conducting their business through managers. That means owners were at the top and they used to give instruction to the manager, and accordingly they used to function. And how it was done? Controls their exercise. Who exercise controls? The owners, obviously, on the managers. How? By accounting and reporting. That means you must report or show me accounts, what has been done over the course of time in the business, and seeing that the owners would keep control or tap upon the managers, keep a tab on and see or overlook the business. This is the second phase of accounting. Now comes the last and the final phase of accounting, that is the third phase of accounting, that is the modern phase. Please copy this by pausing. Okay, that is second phase. Third phase of accounting was developed due to development of joint stock companies in 1600s. As requirement of capital increase. So, the third phase of accounting was, when does that happen? That happened with the development of joint stock companies back in 1600s as requirement of capital increase. That means the business at that time was expanding, and hence joint stock company came into place. And so the shareholders also, that means the interested parties, the lenders, creditors, banks, the shareholders, sorry, this is not shareholders, this is stakeholders. Stakeholders means the interested parties. They wanted to seek financial information. That means what is the financial position of the business, and hence stakeholders, to provide them information to the stakeholders, accounting was being primarily or mainly done. First was Frank Fra Luca Pacrioli, first stage. Second stage was when the owner wanted to see what the manager is doing, and now the stakeholders want to see what the organization is doing. This is the three steps of the evaluation of accounting. Next, a very common question which come in exam is, very important question, it comes very regularly. Is accounting an art or a science? In MCQ they may give you like whether accounting is an art or accounting is a science, or accounting is both art and science. So your answer would be that accounting is both an art and science. Why then this is art and science, that we will discuss now. It is an art because it involves art of recording, classifying, and summarizing financial transactions. It helps us to know financial performance and position of business. That means why it is an art? Because it is an art of recording, classifying, summarizing financial transactions that is monetary in nature, and it helps us to know the financial performance and position of business. That is, what is the position of the business at the current state from seeing this picture. Next is why accounting is a science. Accounting is science because accounting is a science as it is an organized body of knowledge based on principles. That there are various principles or conventions or rules according to which accounting is done. Hence, accounting can be termed as science. So, be careful if in exam it is given, is accounting an art, a science, or both art and science? It should be both art and science. And why? I have given you the details or a complete explanation. Please note down these points. It will be very much beneficial for you during the time of exams. This is our third topic which we have completed now. We will move on to the next now. Next is a very interesting topic which comes very much during the exams. The difference between what? Bookkeeping and accounting. What is bookkeeping and what is accounting? Accounting we have come to know. Bookkeeping also, by seeing the difference you will understand what is bookkeeping. It is an easy method. Bookkeeping is just recording of financial transactions. That is the first step. What is accounting? Accounting is, it involves recording plus summarizing plus analyzing plus interpreting. So bookkeeping is just recording of financial transactions. Whereas accounting is, you see, recording, summarizing, analyzing, interpreting. We have learned a few minutes earlier only that what is accounting. Now the second point of bookkeeping is, it is the first stage, or it is the primary stage. Whereas accounting is the secondary stage. That means first we have to go through bookkeeping and then we go through accounting. That is the first or the primary stage, and after it is done, that is recording of transactions, then secondary stage comes, that is summarizing, analyzing, interpreting, communicating and others. Next is bookkeeping is a mechanical function. Bookkeeping is a mechanical function and it requires less experienced staff because it is easy, just recording. Whereas accounting is a specialized function and requires experienced staff. That means those who are knowledgeable more than those who conduct bookkeeping. That means they have thorough knowledge. Those who conduct accounting, that is, it is a specialized function and it requires experienced staff. And the last point of difference is and the last point is bookkeeping is routine in nature. That means mechanical. That means same thing, one comes after another in the same way, same process, and it does not require special skill. That means someone with somehow knowledge of accounting can do bookkeeping, basic minimum knowledge. But here in accounting it requires special skills as it involves ability to analyze and interpret. Analyzing the information or the financial statements and interpreting. That means what does it show? That how the company is at what stage. That is the main difference between bookkeeping and accounting. You must note this point. These are the main points. Now, another important topic is, this is bookkeeping, this is accounting. So what is accountancy? So there is another definition, or accountancy means somewhat different thing in regard with bookkeeping and accounting. We have known bookkeeping, that is recording, accounting, recording, summarizing, analyzing, interpreting. So what is accountancy? Now we will study that what is accountancy. So, what is accountancy? Accountancy is a systematic body of knowledge that specifies various accounting principles, standards, and conventions. That means, as we know, like accounts, there are various principles, standards, and conventions which need to be followed. That systematic body of knowledge is known as accountancy. Like, say, biology or physics, chemistry. It is a systematic body of knowledge. Likewise, accountancy is also a systematic body of knowledge. What does it include? It includes the principles, the standards, and the conventions set for conducting accounting. It is a field of knowledge that shows route to accounting. That means how accounting would be done. That is based upon accountancy. And accountancy are what? The rules. The rules governing the accounting. And accountancy is basically bookkeeping plus accounting. That is what we know as accountancy. Simple. I hope you have understood the difference between bookkeeping, accounting, and accountancy. Accountancy is a much wider term compared with both these two, and accounting is again a broader term than bookkeeping. Okay, we will also be MCQs after completing this chapter, so don't worry. Next, we come to know who are the users of accounting information. That means, as I told before, the interested parties, the stakeholders, you must remember. Who are the stakeholders? There are two types of stakeholders: internal, that means within the organization, and external, that is outside the organization. So first we will learn about the stakeholders within the organization. Okay, fine. Let's go. So, first, who are the users? The internal users, that is those working within the organization, or those who are within the framework of the organization. They are the internal users of accounting information. So first, what name comes? It is the owners. That means those who invest the capital. They are at the maximum risk because their capital is being invested, and how much profit or loss, they are the first persons who must be most eager to know what is happening. So these are the owners, and owners are the first users of accounting information with eagerness. That means what happened to their money, they must know first. Next is management, that is the functionality part. That means those who work for the company. The management must know the accounting information for what purpose? For mainly decision making purpose. Management must know the accounting information for purpose of decision making. And what we can say is that what type of decision it can take? It can take cost related decisions. That means how much cost control is needed or not. What will be the selling price of the product? Like that only, depending upon the accounting information. And how much sales is required to get that amount of profit which is targeted, and hence so on. Next is these are internal users. Now we come to external users. the external users are the creditors or those who give credit to the company based on the goods sold. Suppose 1 lakh rupees gold, 1 lakh rupees goods is purchased by the company, but the company has for the time being paid 50,000 and told that later I will pay you 50,000. So why the creditor will give 50,000 in lending? It will give only when it will see from the accounting information it gets that the company is viable or solvent, and yes, it has the capability to pay me back later date. So hence creditors would give goods at credit, so they must know the accounting information. Bank and other financial institutions next comes. Why? Because they provide loans to the company or to the business, so they must see the viability of the project, that how it is being conducted or what forecasts or assumes what would be future's outcome of this business, and hence seeing that only they will give loan. Then investors and potential investors, that means those who invest money in the company by say purchasing shares or bonds or debentures, they will see how is the standing position of the company. Seeing that only they will invest, or potential investor, that's why it is being told. That means they are seeing to invest in which business to put their money on, and how will they gauge? By seeing the profitability of the business, or where the risk is less, or if it is more, then it should give you more profit. Then the investors and the potential investors. Next come government and the authorities. The government sees the accounting information and they make government policies based on that, like the customs, GST, how much, which place to put how much tax. Seeing that the accounting information of various concerns and getting a basic idea of the market, they decide all those policies. So government and its authorities. And the last comes the public, the main one. Public, what does it see? The how much employment it is giving, how much it is being giving back to the environment, whether there is any fraudulent activity or not, like the scams, various types of scam which happens, it is free from that, and hence public also keeps an eye on the accounting information. So there are basically 5 external users of accounting information. There are more, but basically there is 5: the creditors, banks and other financial institutions, then the investors and the potential investors, government and its authorities, and last and the main is the public. So these are the users of accounting information. Okay, fine. Next come the branches or subfields of accounting. Basically, in branches of accounting, under branches of accounting, there are only 3 heads. Those are first is, as you see, financial accounting, the cost accounting and the management accounting. What does financial accounting sees? Financial accounting sees that what is the profit and loss during the whole year. During the whole period, 1 year period of time, what is the profit and loss? It sees, the financial accounting sees this part. It ascertains that part. What does cost accounting sees? Cost accounting sees what is the cost of the product, or how cost control can be done. That means nowadays it is said that profit does not depend on selling price but on the cost price. So that's why cost accounting nowadays have been of much importance. And that is what is cost accounting, another branch of accounting. That reduction of cost or cost control. Okay, it helps the management in suppose price fixation and exercising various controls. Okay, and last is management accounting. It sees like how much funds is there, what is the cost, then what is the profit. Means it's a whole little bit mixture of financial accounting and little bit mixture of cost accounting is a management accounting. But remember, these types of accounting are only for the users. Users means those who are working within the organization or the management. They see this accounting part, and these are all being shown to the public. Whether it is financial accounting or cost accounting, also the public can understand by seeing the profit. But management accounting, it is for only for the purpose of the managers, those who see these things. These are the branches of accounting. Next and the last portion is systems of accounting. There are basically two systems of accounting. One is double entry system and another is single entry system. What is the main difference? There are double entry. One means one is incoming, one is outgoing. But in single entry system, it is just a one-way path. That is single entry system. It is the systems of accounting. These two. Double entry system, an example is purchase of goods by cash. So what happens? Goods incoming, cash outgoing. That means there are two parts in this type of system. So that is double entry system. But in single entry system is what? It does not involve two parts, it is just one part. That is single entry system. And double entry system is mainly followed in accountancy, mostly, in most places. So these are the systems of accounting. And by here we come to an end to this first chapter of introduction of accounting. Now we will see some MCQs for exams. So these are the four options, that is whether bookkeeping is recording financial transactions and events, designing for systems recording, classifying and summarizing data, interpreting data for external and internal users, or recording data, recording and analyzing financial transactions. The correct answer would be recording financial transactions and events. What is bookkeeping? Just recording, remember that. Financial transactions and events. Next comes another quiz which comes regularly for MCQ purpose. What is the last step of accounting? I am not writing the options, I think it will involve much of time. I am just giving the answer. There might be four options. The correct option would be, you must remember, first is, what was the first one? Recording. Next, classifying. Then summarizing. Then interpreting. And the last one is communicating. So the correct answer of last step of accounting would be communication. Note this point, that the last step of accounting is communication. Okay. Now, if you have understood the class, then very good. This is the first chapter and it ends there. I hope you have understood the class, and if not, please go through the video again, and please don't forget to like, share and subscribe my video, and welcome to Orco's classroom. Daily you will get videos where I will solve the chapters or give explanations to you at the easiest possible way for your upcoming near future exams. Thank you.